Okay, guys. It's a bit late at night. I'm kind of finished for the night, but I'm gonna quickly answer the last question for Kojak. Little salute to you, kid, because I saw you message me and I forgot, so I do apologise. Sometimes things get lost in translation. So let's have a quick look at it for you. So flick this over. Just get my. Well, I've got actually drinking chocolate tonight. Normally it's a coffee because we all know Scruffy likes a coffee. But I'm having a chocolate tonight. So let's get to these questions. And yeah, here we go. The Hobbit's looking for a challenge again. Brilliant. Will I get the Mankini out? Scare him before he starts. I might take the Mankini to Benidorm with us, actually. Right, he's thinking of a fast market, low lot size, and get to as close to £1,000 by the end of play. And the Mankini needs bidding. No, in fact, I think I'll wear it just to annoy you. Right, okay. It depends on your definition of lot size. Now, I know we're discussing it a little bit further down. So it's US 30, the NASDAQ, or gold. Gold is a bit of a bitch at the moment to trade. So I'd have to be really careful with that. I'd be more inclined to look at the US 30, the Dow, or the US 100. Now, of the two of them, the US 100 is the cheaper to get in. So that's hence why I'm asking the question, because you've got on there no more than 0.1 lot, which is roughly about £1. So I'll see what you have to say, and we'll kind of put it to the test. Well, you're actually typing now. So we'll have a look when I've answered this question. So answers hub. Let's have a look for our little friend. Yeah. What I'll say, guys, is when you start having chats underneath in the answers hub, I do lose track of where the questions are. So if I miss it, just give me a nudge and I'll go back in and have a look. So the question is, I'm wondering how much weight the bias hold when looking at a retracement. If the bias says down, for the example, would I take a retracement to the upside if there are clear signs that that market will retrace? E.g., Bollinger Band closing in, price returning, etc. Broke 23 also. Currently in a trade and market that is stalling, and it always seems to. Okay. Right. I'll come back to that. All right, so 5 a pop. Well, that's under a 5k account, so that's doable. Right, so I'll look at that separately. But let's answer this question about retracements. Okay. The first question I'll be asking is why you're going against the bias in the first place. That, to me, is chasing a market and nothing short of gambling. So cut that out. The reason you have a bias is to give you a general view of the market, but also give you weight as to which way you're going to go. Am I going to go long? Am I going to go short? Yes, there are retracements. So the weight that I put onto a retracement that is going against the bias is 0. I don't put any weight on it at all. What the retracement is doing is actually allowing us to get a better price for the direction we're going in. Now, you see me do examples of this all the time. So yes, you can look at a fib or what we call a Kylie. Now, a Kylie is a very simple process. Breaks the 23, moves to 38 risk-free, you get out on your 50. The longer it stays below the 50, it will retrace to the 0, breaks the 0, it'll move to 127. If it breaks the 50, holds above the 50 significantly, and breaks the 61.8, the chances are it's going to go to make a high. Breaks the 100, it'll then go to the 127 above the 100. So it's a quite simple process to follow. But that's only if you ever are setting out to use that in the first place. And that's because there are certain conditions that apply to a strong directional drive. It's either an overextended candle or it's an absolute banger of a move. Now, if you can't see that move to draw the fib on, and you're relying just simply on your bias, the general direction of the market, then any retracement you take has to be in line with that direction. So if you're letting the market pull back on itself, you are not counter trending. So I'll get into that more tomorrow night. We do in the live Zoom where we break a chart down, and I think it'll be a good idea if you put your head in. I will take the mickey because we do. No, I won't. But show me what you're thinking. We'll let you mark the chart out and we'll talk you through it. And not only will we talk you through it, I'll give you pointers as to when and why you would enter a market in a certain way. Always remember, the moment you press the button, the market will move against you. So it'll move against you so far, but eventually it'll start going back in the line of its trend. And if you know what the trend is, because that's what the bias tool does, it works the trend out for you, then just go with it. And if you've got to wait for it to move up through a retracement, fine. Don't panic. So try and stick with the general direction, the double D. Now, there are scalping situations, which we go through. Then you can look at your fib situations, which is what you're talking about. But it has to be a strong directional drive. It has to have broken the 23 significantly and heading straight back to the 50. And it all starts with putting the fib on the right move in the first place. And we know which ones those are. Okay, so let's quickly flick this over. And I'll quickly see this. So max 5 splits, pounder position, no more than £5. Lots on a table at any one time. Okay, I'll see if I can put that into practice. Brilliant, thanks a lot. And you wonder why I'm going bald, boys and girls. You wonder why I'm going bald. But yes, I will do that for you guys. Okay, it's late at night, so I'm going to just toddle off. It's been a long day for me. So as always, do what you love and the money will follow. See you all in the next one.